Ladies and gentlemen, good day and welcome to Wonderla Holidays Limited Q3 and FY25 earnings conference call hosted by Ambit Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Khanna from Ambit Capital. Thank you, and over to you, Mr. Khanna.
Thank you, and good afternoon, everyone. On behalf of Ambit Capital, I would like to welcome you all to Q3 and 9-month FY25 earnings call for Wonderla Holidays Limited. From the management, we have with us Mr. Arun Chittilappilly, Managing Director, Mr. Saji Louis, CFO, and Mr. Dhiren Chaudhary, Chief Operating Officer of the company. We would like to now begin the call with opening remarks from the management, following which we will have the forum open for an interactive question and answer session. Thank you, and over to you, Arun and Saji.
Thank you, Karan. Good afternoon, everyone. This is Arun, Chairman and Managing Director of Wonderla Holidays. We are happy to present the Q3 and 9-month FY25. We are first of all pleased to announce the successful completion of our recent fundraise through a QIP process, which generated significant interest from market investors. We appreciate the trust and confidence shown by the investor community in our growth strategy and long-term vision. This quarter was encouraging but also challenging for Wonderla, signaling some recovery that we've seen especially in our Hyderabad park. We have seen the best ever Q3 for Hyderabad since about 8 years of operation. Revenue for the quarter was 121.5 crore, a degrowth of 2% compared to the previous year. The dip in revenues were mainly due to lower turnout in some of the key locations like Bhubaneswar and Cochin. Our footfalls for the quarter stood at 9.18 lakhs. In terms of strategic initiatives, we made significant strides across several key areas. We are on a digital transformation path, and recently our website has been revamped, and we are also in the process of doing many other initiatives, including ticket booking and POS. This initiative blends in for both in-park and digital engagement. So we've also relaunched our mascot Chiku with a new attraction in our Kochi park. Also will be rolled out to our other parks. We also hosted some vibrant events such as as WonderCon in Bhubaneswar, Halloween in Bangalore, and festive celebrations like Christmas and New Year. These events, combined with special promotions, have played a key role in maintaining the footfall and enhancing overall guest experience. Additionally, we continue to see a rise in online bookings, particularly across our established parks like Kochi, Bangalore, and Hyderabad, reflecting our successful efforts to adapt it to a shifting customer preferences and expand our online presence. With our continued focus on growing non-ticket revenue, our customer spend per head has grown by 9% and 12% for Q3 and 9 months respectively. On the expansion front, we are excited to share that our Chennai park is slated to begin operations towards the end of the next financial year. Most likely will be open for commercial operations from December. The extension of our resort at Bengaluru is also proceeding at the right direction, and we are expected to launch this by the beginning of next financial year. All other sustaining capex activities across the parks are progressing as per schedule. We are excited by the tremendous opportunities that lie ahead to broaden our park portfolio and strengthen our position in the industry. Our outlook for growth is positive, especially long term, and we are confident of the industry growth, especially in India, which has a young population, etc. With that, I would like to conclude my remarks and hand over to Saji, our CFO, for a detailed financial analysis.
Thank you, Arun. Good afternoon, everyone, and thank you for joining the earnings call for Q3 and 9 months period ended FY25. I'm happy to provide a comprehensive overview of financial performance for the quarter. Revenues for the quarter stood at 121.5 crores compared to 123.6 crores in the same period last year, reflecting a year-on-year minor degrowth of 1.7%. Our EBITDA, including other income for the quarter, was 42.2 crore, down by 30.3% on a year-on-year basis. EBITDA margin for the quarter stood at 33.3%. Additionally, our profit after tax for the quarter amounted to 20.3 crore, representing a degrowth of 45.7% compared to the previous year. PAT margins for the quarter stood at 16.1%. Moving to the 9 months financial performance, our revenue reached 361.8 crore, down by 5.6% on YOY basis. EBITDA, including other income, for the 9 months stood at 140.9 crore, down by 32.8% on YOY basis. EBITDA margins stood at 37.5%. The profit after tax stood at 98.3 crore, and the margins are at 26.2% for the 9 months ended FY25. In terms of our average revenue per user, our Q3 FY25 stood at 1,272, and for the 9 months it stood at 1,472. Now moving on our footfall metrics for our parks. For the quarter, our Bangalore park recorded a footfall of 2.99 lakhs. Cochin park welcomed about some 2.57 lakh visitors. Hyderabad park achieved a footfall of 3.28 lakhs, and then the newly launched Bhubaneswar park recorded a quarterly footfall of about 34,000. For the 9 month period, Bangalore at 8.54 lakhs, Cochin at 6.7 lakhs, Hyderabad at 7.19, and then Bhubaneswar at 1.28 lakhs of visitors. Our average room rent at our Wonderla resort as on for 9 months period stood at 5,770, while the occupancy stood at 52%. With that, I would like to conclude my remarks and open the floor for Q&A session. Thank you for your attention and then continued support.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have our first question from the line of Himanshu Upadhyay from Berger Rock PMS. Please go ahead.
Yeah, hi. Good afternoon. Can you give some idea why the Q3 numbers footfall was significantly bad for Bangalore and Kochi? And generally, Q3 is the 30% of the footfalls in a year. So some thoughts on that. And because in the last conference call, we stated that Diwali and Dussehra have been very good. So what happened in December? Some thoughts on that will be helpful.
Yeah, hi. This is Dhiran here. So what happened in Bangalore was we had a great Dussehra, but it's the second half, which is also a critical part in October, there was the sudden unexpected monsoon. In fact, you would have read news about Bangalore being under the flood. So it kind of derailed our entire revenue for 2 weeks, which kind of caused the dip. And in Cochin, we saw good growth in our retail footfall, but this was a big year for groups. And unfortunately, due to certain health concerns, there was this whole meningitis issue that was playing in Cochin. A lot of school groups refrained from coming this year to the park. So that's why Cochin dipped, and Cochin also had the Kerala area also sent some groups closer to the Bangalore park. So these were the two large challenges and concerns that caused the dip in Cochin and Bangalore.
Okay. And one thing, in Bhubaneswar, last quarter we were at 93,000 footfall, okay? And Q3, again, which was a festival, it fell down to 35,000 footfalls. And we are expecting that to do 3 to 4 lakh footfall in first year. And we also stated that if we are seeing that footfalls are low, we can offer discounts and have good footfalls as our ARPU is still better than what we were expecting. So can you throw some light on what are the situation or what happened in Bhubaneswar means? And
I think the numbers are not correct. Overall, for the first half of the year was 93,000. But last quarter, we had roughly about quarter two, we had 22,000 footfall. So we actually, in quarter three versus quarter two, grew our footfall by 50% quarter on quarter basis.
Yeah, but the issue, I think again, weather is one of the issues we had. We had 2 cyclone events there. And also, I think because it's the first year and we are new in the category in Bhubaneswar. Most of the water parks that are existing in that area, they are operational mostly during summer only. And so the whole idea of going out to an amusement park during a winter season doesn't exist there. So we have to create the category. So I think these are the 2 issues that we faced in Bhubaneswar. Mostly the inclement weather, like during Christmas also, which would have been a nice, it would have been a nice season for us. There was a cyclone in Bhubaneswar, if you recall. So I think those are the 2 issues. I think going forward, especially say from March onwards, I think we should be able to see good footfalls in Bhubaneswar.
Okay, because in Hyderabad also, when we launched in first year, we did around 6 lakhs plus footfall. And here, even seems 2 lakh would be a...
Yeah, this year, but we didn't have the whole year in Bhubaneswar. I think like the majority of the summer was already over by the time we opened. So it's not really an ideal time. We just got like 1 month, I think, no? For summer. So I think summer is the main season in Bhubaneswar. So March, April, May, June seems to be the biggest footfall driving month in Bhubaneswar, and we missed most of it. We only got June. And then we opened, I think, on May 25th, if I'm not mistaken. So I think going forward, I think we'll get that. But I think Q3 also there is a chance for us to get good footfalls, but I think we will have to now, this Q3 we couldn't get because there was a lot of warnings and cyclone warnings and all that. And so when that happens, especially in Orissa, they are prone to cyclones. People don't go out. So I think that's the main issue. I think we should be able to get back that in the next year.
And any lessons to learn from this market or 9 months since what we have operated? For smaller theme parks like Bhubaneswar, we would like to build a park in 200 crore plus. So what has been the experience, and you think the business model makes still sense? And
see, we still haven't finished 1 year. It's only been officially the park was opened in September, and we had a soft launch phase from June to September. So I mean, technically we are open only. Officially open from September onwards because the park itself was not fully complete. So I think this financial year, next financial year if you ask me, that is when we'll have a full idea of it. So I would say that I'm too early to say anything. We are still bullish on the market because if you look at our ARPUs and spends and all that are very high. So that gives us a lot of confidence that there is, and also I don't know whether you remember, but when we opened, the first 40 days was extremely crowded. In fact, we had to return a lot of people, and we couldn't accommodate all the people that came to the park. So definitely there is scope to do this, but I think it is highly seasonal in that market, so we need to work accordingly. So so far that's the learning. The potential is there, but I think it's also a highly seasonal market. That tends to happen in a new park, especially in a place like Bhubaneswar where there are no existing amusement parks. So I think you can expect that.
And one last question. Any progress on new projects, or where are we stuck up with new projects? Now we have
These are all with the government, so I mean, it's in a government's table, so we are waiting for some kind of closure on the deal. I think we should be able to announce something soon. We will keep you updated. Nothing has changed from our side. We are, we are still, as far as we are concerned, we are going ahead. But I think, of course, we are focusing mostly to kind of finish our Chennai project now. But I think we will announce one, at least we should be able to announce one more location soon. We will keep you posted.
Okay, thanks. I'll join back in a few.
Thank you. We have our next question from the line of Naman Shah from Monarch Network Capital. Please go ahead.
Hi, sir. Just one question from my side. Just wanted to understand on what are we doing to kind of increase our revenue and footfalls in existing parks? Because there we are kind of seeing a lot of decline. So are we doing any incremental capex or to kind of enhance our experience in the existing parks?
Yeah. So we are doing a lot of incremental capex, especially in the older parks like Cochin and Bangalore. We are opening a new attraction. We just opened a new attraction in Cochin end of December, which is our Adventures of Chiku ride, and that will be rolled out to Bangalore and Hyderabad as well. I think it will be done as we speak. Then we are also launching a large attraction in Bangalore, virtual attraction, which is already there in Hyderabad, but it's not there in the other parks. So, and then also we are probably adding some big rides to Bangalore and Cochin as well going forward. Because they are all much older parks, but we've also incrementally done capex, and we are also looking at adding some new restaurants to our older parks. So these things are happening. But the issue, what has happened in the last quarter has nothing to do with that. I think we already, the main issue was inclement weather and some group footfall, that got diverted. I mean, we didn't get the group footfalls in Cochin. So these are the two main issues. But if you look at our general footfalls have been growing. So I think that gives us confidence that, once the season kind of stabilizes, it should be fine. And Q4 anyway is not a very big quarter for us in terms of footfall. So far, I think we are flattish. Like I said, we are not expecting growth in this year. But going into the next financial year, so we can definitely see growth, and that's how we are looking at it.
Okay. And what led to such, the footfalls in Hyderabad have been impressive this quarter. Is there any marketing or advertisement spends that led to such an outcome?
No, actually the footfalls growth in Hyderabad has happened mostly from groups. Which actually, we've not had huge group footfalls in Hyderabad from the beginning, but this year we've been able to crack that, and so I think group footfall has disproportionately increased our Hyderabad footfalls, and I think we want to see a similar effect coming in our other markets also. We expect to see that, and Dhiren will talk about it.
It's also, if you see operationally, it's only 8 years old, so it's a newer market, and we definitely see a lot more potential. So that's something that we've been actually able to juice out in the last quarter. And we continue to stay bullish on Hyderabad being a big growth driver for us in the coming years.
Right. So how much did group contribute to the revenue?
Group footfall was about 42 to 45% of the overall.
But that is annually, but for this quarter it will be higher.
This quarter is about 42 to 45%, which is, last year it was at about 36, 37, because groups outgrew general footfall. We've been able to increase the skew, but this is only for this quarter, because it's usually the quarter when the school picnics happen.
Right. And last question, sir. Just wanted to know the ARPU for Bhubaneswar for this quarter.
For the year basis, it's about 1,200 plus.
Yeah. And for this quarter?
This quarter, because
Slightly
900, I think.
Because you get
about 1,030.
1,030, because you get school groups. Again, in Bhubaneswar also, we've been able to almost 45 to 50% of the footfall we got was groups. and groups usually, because these are bulk deals, they come at a lesser average ticket price. That's why the difference in ARPU. But at a year basis, so far it's 1200.
Okay, okay. Thank you. That's it from my side, sir.
Thank you. A reminder to all participants, you may press star and one to ask questions. The next question is from the line of Angad Katkare from Samiksha Capital. Please go ahead.
Thank you for the opportunity. My first question is regarding, we have appointed a business head for tours and travels in the last quarter. Is this a new division? Just wanted some rationale on the same, and if you could throw some light on the same. Thanks.
So we always had a business head for our tourism business. It comes under our overall group's business. We always had a business head managing the tour operator business. And obviously now, because we scaled Bhubaneswar, we scaled Chennai, we definitely feel that with also the government investing on tourism, we definitely feel in the mid to long term, there is a good opportunity to work with large OTAs, tour operators, to bring in the incoming FIT tourists across all our locations. So we want to build that business robustly. So that's something more of a midterm strategic initiative.
Okay. One bookkeeping question on the other expenses have increased to 49 crores this quarter. Substantial jump. What has driven that?
No. There are a couple of things in the expenses front. If you can see, we have this employee stock option plan released in last year, which is having an expense of about 2 crores on every quarter. And then apart from that, we spend about 3.5 crore for our marketing, almost for a one-time expenses. This is for the video shoots for Dasara activities and all. Apart from these exceptions, there are no more additional spend during the quarter. And then we have made a little bit of staff expansion compared to the last year. We have made about some 67 number of people joined our company when you compare with the previous quarter.
Okay. And if I look at the 9 months period, our average ticket price has fallen by 2%. So for this year, is it safe to say that going forward, our focus will be on increasing footfall? So that will
Yeah. So I think, see, the way we look at ticket prices is also a function of demand. So whenever we see demand weakening, maybe because of weather or other issues, and we see intent to visit is low, we will play with pricing. So we are slowly going towards a dynamic pricing kind of a model that we use discounts and other methods mostly for online footfall. So that's why you'll see ATPs will keep fluctuating a little bit, especially in Q2, Q3, and Q4.
So any comments on the guidance for FY26 on the ARPU and footfall side?
We don't give guidance, but we are hoping that Q1 of FY26 should be stronger, because that's the first time we will have an entire Q1 for Bhubaneswar. And also, I think Bhubaneswar, we are still in the kind of a semi-launch phase in the last year. So I think this is the first time. I think next financial year, we hopefully March onwards we can see Bhubaneswar numbers pick up. Other than that, I think our footfalls in the existing other markets like Bangalore especially and Cochin were lower last year in the summer. So hopefully we can see a recovery in that also.
Sure. Thank you. I'll get back to you.
Thank you.
Thank you. A reminder to all participants, you may press star and one to ask questions. The next question is from the line of Roland Nandu from Edelweiss Public Alternatives. Please go ahead.
Yeah. Hi, Arun. Thank you for taking my question. Just on the footfall side, right? I mean, this year has been quite peculiar in sense that there have been a lot of weather-related issues, exigencies, which have probably related to lower footfall. But just wanted to understand that one of the reasons why we embarked upon we raised money was to probably, grow aggressively, and we could see, demand after COVID had shot up, right? Uh, does the experience this year anyway change our long-term outlook in terms of, a matured park being able to generate a footfall of, let's say, 10 lakh per year, or that assumption still holds true?
Yeah, yeah, yeah. It still holds. It still holds. See, I think inclement weather is always going to be an outlier, and it's not going to, it can throw off any number for any kind of discretionary spend, especially wherein you want people to actually travel to a location and experience that. Any kind of tourist places, is susceptible to inclement weather. So that is the one wild card that we will not be able to predict for. But other than that, I think we are not seeing any kind of, we are not changing our strategy because we feel that there is demand. Our pools are strong. So, I mean, in that sense, we are not worried about it.
Sure.
And also the lack of other amusement parks also. So there are not too many direct comparisons for us. Most of the markets that we operate, we are the number one player. So I don't see any other, long-term issues.
Sure. So let's say if we remove some of these days or one of these, some weather-related issues, do we continue to see the trend of, let's say, pent-up demand which we had seen post-COVID?
There is no pent-up demand anymore. I think demand has normalized. So that pent-up demand phenomenon happened only in 22 and 23. So now I think we are coming to a more of a normal situation. But I think some of these weather events, if you can remove, I think we'll see. We can look at a better footfall from that perspective, I think.
Understood. So that 1 million still holds, right? I mean, on an average.
Yeah. No, we want more than that. 1 million is not good enough for us anymore. So.
Oh, great. That's good to know. Good to know. So, some of you have made some investments also, right? Made some changes also, right? So let's say in 26, you mentioned that some of the parks are older. You are adding new rides there. So does it mean that, let's say, when we enter Q1 of FY26, we will have dual levers of, having these changes also which we have made, and then footfall should also normalize, and because demand comes back, we will be comfortable in getting back to our long-term 5% kind of a ARPU increases. Is that a right way to, probably summarize how you look at FY26 right now?
Yeah, I think last year, like I said, this financial year has been tough for footfall growth. In fact, our footfalls have degrown, and especially the older markets, and even in Bangalore, which is our biggest park. So we have done substantial investment in new rides in all these parks. So I think these will kick in by the end of this. By March, I think we'll be opening the latest attraction. We are opening a new attraction in Bhubaneswar also, because Bhubaneswar, what has happened is, when the people come, they all seem to come in that very 3-4 month window. We have huge footfalls coming. And last year what happened was we were not ready, and we were not able to accommodate a lot of those visitors. So I think they're doing some corrective action there. So I think for summer we will be ready with some new attractions, even in Bhubaneswar also. So Bhubaneswar, Cochin, Bangalore, even Hyderabad, all 4 parks will have new attractions going into summer. So I think we should be able to accommodate more footfalls, and we should be able to market it more effectively as well.
Sure. So just to understand these new attractions, are these in place of the older rides, or are you using the land that you have, which is unutilized and expanding?
It's a mix and match. Some are new attractions, like for example, the new attraction in Bhubaneswar is a new attraction, which we didn't have before. Bangalore, we have discontinued an old attraction, and we are making into a new attraction, a theatre attraction.
Understood. And I saw your LinkedIn update as well, and you mentioned on this call as well. Am I correct that you are expecting December 25 to be the date or month in which your Chennai park will start operating?
December 2025, we are hoping to open the park to public. A soft launch at least, not a full launch, but at least a soft launch will be done by December 2025.
Okay. And so it's on in line with what you were expecting, right? There have been no delays there.
We were supposed to open in June or July of 25, but that is delayed to December 25. That's the only change.
Okay, understood. And just in terms of the pipeline, right? You mentioned that the ball is maybe not in our court, and it's at the government's end. But in terms of our outlook of maybe building the capabilities of maybe starting two to three new parks in a year rather than just one in a year, is the pipeline in terms of adding new states, add new states showing interest, is that increasing, or is that how should one think
I
about
think it's the
that part?
same. There's no change there. It's just that they have their own procedural delays in doing this kind of activity. So, anytime the government has to release or parts with land, there is a lot of procedures. So, I think there is some those delays. I think that is what's keeping them. But other than that, from our side, there is no lack of interest. Or, I mean, the governments are also being very, very supportive, especially UP government, Madhya Pradesh. So, we are following up with them, and hopefully, we will have some results. We will update you.
Right. That's it from my side. I'll join back the queue. Thanks a lot, Arun.
Yeah.
Thank you. The next question is from the line of Yashanandan Nerurkar from Ionic Wealth. Please go ahead.
Yeah, hi. Thanks for taking my question. So firstly, I wanted to know about the QIP. So after listing, this is the first time you will be raising funds. And I mean, basically, you've been generating a lot of cash anyway. That the last 2 years, if I have to consider, it's almost 180 and 200 crores. Before that, also, you were averaging somewhere 100. So if you have raised the QIP, funds through QIP, can you just explain how and how the funds are going to be used? What is the utilization going to be like, and in how much span are you going to utilize it?
So the QIP fund mostly will be used for Chennai, and some of it will be used for our other new projects, and some of it will be used for our existing projects like Bangalore. So these are between Bangalore, Chennai, and some new projects. This is how this QIP will be used for that.
But would it be fair to say that
Chennai will be used quickly. Bangalore also will be used within a year. It will be finished. And that the general corporate purposes, we have kept some money, so that could be used for the new projects.
right? And I mean, would it be fair to say that more than 50% of the funds raised would be used for Chennai, or would it be equally spread between
Around 50%.
50% for Chennai?
Yeah.
Okay. And I mean, this and the previous quarter has seen some sharp rise in employee expenses of the previous year. So that is an account of addition of newer employees for the newer park.
Newer parks and Bhubaneswar, for example, in the existing parks also we have added some people because we are from a 3-location company, we are becoming a 5-6 location company. So some extra hands are required. So that's.
And you mentioned you added some 67 employees. I mean, did I get it right, or?
Yeah. I think
Okay.
half of them are on the sales team, right? Yeah. So we are increasing the presence in some of our sales markets. So sales and marketing will see some increase in employees.
Okay. And just wanted to get a sense on what is your plan. See, I mean, we know that this, to some extent, this is a cyclical business. The footfalls aren't always going to be, rising continuously. But what is your plan as to increase the footfalls on a consistent basis? And again, I mean, when I look at the ticket prices, there's two components. There's the hardcore ticket price and when we spend. So,
Sorry, you're not clear. I'm not able to hear you clearly.
Is it better now? Hello. Hello, is it better now?
Ladies and gentlemen, we have the management disconnected. Please stay connected while we reconnect them. Ladies and gentlemen, thank you for patiently waiting. We have the management back with us. Over to you, sir.
Yeah, so I lost the last question. Or
Uh,
we can go to the next.
Can I repeat?
Yeah, please.
Yeah. So basically, I was just asking this question. I mean, this company, the business is of a nature where the footfalls are going to be little cyclical, right? And again, the weather is a factor on which we don't have any control. So one, what are your plans over a longer term to increase the footfalls on a little consistent basis? That's one. And secondly, if I look at the ARPU, that is majorly based on two components. One is the ticketing price and one is the food and beverage. Now, food and beverage again wouldn't be in your control, but again, the ticketing price would be in your control, where you can't increase the ticket rate sharply, where you would see lesser footfalls. But again, I mean, you can dynamically play it around. So what is your overall, how would you make sure that the ticketing revenues are good enough as well as the footfall increases consistently over a period of time?
See, I think the business, any kind of tourism business will always have weather, being one of the issues that can, create dips in footfalls, and that I don't think we can change. We can do a couple of things. One is to have more geographies where we can, so we can hedge we can grow in size and also hedge our bet in terms of weather issues. The other thing is we have more tickets sold online and booked in advance so that we can lock in footfall. So we are doing both, and if you see, if our footfall, almost more than 50 or 55% of our footfall, general footfall, is now pre-booked and online footfall. So that I think is something that we will keep growing. Like I said, we are investing heavily in our sales and marketing so that we are. And also, we are also investing in our digital transformation. So all these things will help us to make sure that a lot of our footfalls are pre-booked and days or months in advance, so that we are not dependent on these last-minute cancellations. So that is one strategy, and of course, the other one is to be geographically in diverse locations, so that even if there is inclement weather issues, the footfalls will come from multiple locations. So these are the two things that we can do.
Right.
And also having newer attractions, which are, we have more, especially going to other cities where we're having more covered areas and things like that. So insulate a little bit from the weather, but we can't completely eliminate that factor.
And by any chance, do you keep a tab on the repeat customers, or how the same customer, is he coming? You do. And any idea if you can share, like, what percentage of the total footfall would that be?
I think almost 30-40% of our footfalls is people who have visited us before.
In the same year, you're talking about, right? In the same financial year?
I mean, they would have visited us the same year will be less than 10%.
Okay. Fair enough.
One more thing, the ARPU is a combination of ATP and SPH. SPH is also we maintain in our parks. So because entire restaurants chain in our parks are managed and operated by Wonderla.
Okay.
We also do a lot of interventions to get more revenue out of non-ticket revenue. You can see
Correct.
About some 9 and 12% of growth is there even in Q3 and 9 months period.
Okay, fair enough. So that's it from my side. Thank you so much for your answers. Thank you.
Thank you.
Thank you. We have our next question from the line of Vedant Bhashin from Minerva India. Please go ahead.
Yeah, hi. Thank you for taking my question. Number one, if you could just quantify the impact of precipitation in each park, because I think we've spoken about the weather events quite a bit. I just wanted to know if you can maybe tell us how much footfall would have been if not for those days lost because of rain.
Hard to quantify, but then if you look at our footfall, degrown by about roughly 14%, right? In the existing park.
Bangalore about some 14%, and even the Kochi park also same.
Bhubaneswar also, I think we lost maybe about 30,000-40,000 people because of that. So I think if you look at the dip itself, it's a good indicator of what kind of footfalls we would have lost in those weather events. Mostly weather events is what played against us in the last quarter.
But to give you a sense, Christmas was a clean weather, good occasion. Our campaigns were successful. We saw double-digit growth in footfalls, right? So when we see that.
But except Bhubaneswar where there was cyclone.
Except Bhubaneswar where there was.
Park on park.
we saw growth of double digits. So when there is a good weather and we are able to run campaigns successfully, we are able to see that we are able to generate demand.
Got it. So maybe about 20,000-30,000 is what we lost in Bhubaneswar. And then would you say similar numbers in Kochi and Bangalore?
Kochi, I think we lost more, no?
We lost a lot more because groups in Q3 plays a big piece. So we would have lost 60,000-70,000 because of the meningitis issues that was in all the schools. So I would say Cochin would be a lot more.
Okay. And Bangalore similar then to Kochi?
Cochin and then maybe another 50K, right?
Yeah, almost like 50,000 roughly in both the parts. Each of the parts.
Okay, got it. Thank you. And next, this was a more general question. So Hyderabad, we've seen now it's sort of come to fruition. It's come to sort of a stable region where the footfalls are growing. So would you say in general, a park when you set it up, it would take maybe 5+ years for it to get to such a stage, or was it sort of special in Hyderabad?
It depends on the market. Some markets it comes quickly. Like for example, Cochin, we had I think to reach 1 million footfalls, I think it takes about 5-6 years.
Hyderabad is a bit off because after 4 years of starting, it was shut for 2 years because of COVID. So it was again we had to restart. So it had a break. But yeah, I think a large metro city would take 4 to 5 years to get to at least 1 million plus for you.
Got it.
We are hoping that in Chennai it will happen a little faster because we are a much more well-known brand in South.
Right. Okay. And if you could maybe just give a capex guidance for next FY26, FY27.
Presently, whatever is as per object, as per QAP, which is for our Chennai park, and then certain other extension in our existing park like Bangalore, one ride, and then the refurbishment of our resort. All those things are already planned as per the QAP. And apart from that, we generally spend about some 10% of my revenue towards the capital expenses as a ride expansion or maybe a restaurant building, and combination of this.
Okay, so maybe in the 400 to 500 crore range.
You're talking including the new park and other facilities? Yes.
Yes.
Yeah.
Got it. And one last question I had. So you had mentioned on some earlier calls that it takes about 300 to 500 crores to set up a new park. And it took around 200 for Bhubaneswar. So would it be fair to assume that since Bhubaneswar is leased, about 200 crores is the cost for setting up just the rides? Is that fair?
Yeah. Not the park, not the rides, the entire park. There are a lot of things. Yeah. Setting up a park for us in a tier 2 city, you're looking at around 200 CR, and for a large city, 500 CR.
Okay. And so how much would be exactly the rides cost be? So out of this 200, how much do you think was spent on rides?
I would say 60%. 60% will go on rides. 40% will be other things, buildings, restaurants, pathways, other utilities, lot of utilities, lot of things.
Okay, so about 120. And this 120, is it mainly imported? Because I think there was talk some time back about maybe manufacturing our own rides, some of them as well.
A lot of our rides are our own. I would say half of them are made by us, and the other half will be imported.
All right. Got it. Thank you. Thank you so much for answering.
Thank you.
Thank you. We have our next question from the line of Monish Ghodke from HDFC Mutual Fund. Please go ahead.
Hello. Thank you for the opportunity. So how much annualized footfall you expect in Bhubaneswar on a normalized basis?
I think once it kind of fully matures, we are expecting between 5 and 6 lakhs, 5 lakh to 6 lakhs.
Okay, and by when you expect it to, to reach that number?
4-5 years.
Okay. And so once at what level it should break even? I believe,
2 lakhs it will break even. 2 or 2.5, around
2 lakh.
2 lakhs.
Okay, and that by when you expect to have that kind of footfall?
That should be happen next year. Next financial year it will happen.
Okay. And so I believe we are also planning a park in Madhya Pradesh, right? So how much capex are we doing there?
Similar, 200 crore kind of size.
So that would also take like 3-4 years to get matured, right?
Maybe a little faster because it's a slightly bigger city. But yeah, it's hard to predict at this point.
But then, sir, if I see the payback period of this business, then it comes to like 8 to 10 years, right?
Yeah, within 8 years, I think we are expecting.
So the capital heavy, so the front loaded everything. So it will just 4 to 5 years for a smaller park, maybe 7-8 years will take for a large park. Like even at tier 1 cities and all, it will take some 7 to 8 years.
Okay. And so I think you have answered this before. I mean, the kind of degrowth we had, it was because of some weather factors or some, specific issue like some virus. But are you seeing any kind of, cyclical slowdown or, any kind of,
that could also
overall consumption?
The small impact of that also is there.
Yeah,
Okay.
I think clearly the microenvironment factors, a lot of other consumer companies have also stated out about the slowdown in discretionary spend. So I think that also implies to us.
Okay. Okay. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to one per participant. Should you have a follow-up questions, we request you to rejoin the queue. We have our next question from the line of Amit Agicha from HG Hawa. Please go ahead.
Good afternoon, sir. Am I audible?
Yeah.
First and foremost, congratulations to the entire team at Wonderla Holidays on exceptional achievement of being India's most visited amusement park. Most of my questions have been answered. Like I was just wanted to know, like, what are the total number of employees the company has, and the new park which is coming up in MP. Where is the location?
We have 800 to 850 people are there on rolls, and then we have about some 1,800 people will be there on off rolls as well.
As of now. But it will grow, and when we have a new park, every park will have at least 700 to 800 new employees. The new park in Madhya Pradesh, we are planning between between Indore and Bhopal. We are there. Can you hear us?
Amit sir?
I think we lost him.
As there is no response, we'll move on to the next question. The next question is from the line of Krutika Prabhu Desai from Mary Assets. Sheikh Khan, please go ahead.
So first on the footfalls, we have around 23.7 lakh footfalls for 9 months, and sir just mentioned that we expect footfalls to be flat for for FY25. So is it that Q4 we see good amount of growth in footfalls? Your view on the same?
No, what I meant by flat is like quarter on quarter it should be flattish. We are not expecting much growth in Q4 because Q4 is anyway it's not a much of a weakish quarter, and any growth in footfalls usually happens in Q1 or Q3 for us, usually.
Okay, all right. And also on the margin front, for 9 months, whatever we have, margin of around 37% for EBITDA margin. So for the full year and for the next 1 or 2 years, what do we expect, how the margins to move ahead?
So it depends on when you are opening up the park, but generally there will be expenses which is not corresponding to the revenue what they generate. So which can impact our EBITDA for a temporary period. This can be about 35 to 40% if you historically observe the EBITDA margin of the company. So you can see about pre-COVID, it was about some 35 to 40%. And after COVID, after adding another 2 years, post-COVID, it's about some 40%. So it's
always
40 to
35 to 40% could be the expectation, I feel.
Okay, okay, all right. So that's it from my side. Thank you.
Thank you. We have our next question from the line of Kaustubh Pawaskar from ICICI Securities. Please go ahead.
Good afternoon, sir. Thanks for giving me the opportunity. So my question is on the non-ticketing revenues. So this quarter we have seen Bangalore, Kochi non-ticketing revenues growing by around high single digit. So should we expect, consistent kind of a growth in non-ticketing revenues in this range only, high single digit to low double digit, considering the fact that you are, putting a lot of investment to increase the contribution of non-ticketing revenues?
Yeah, I think a lot of investments are made to continue to build on our non-ticketing revenue. If you look at our last 4 years CAGR also, we've been at about 11%. And we are bullish on driving our ARPU through our non-ticketing revenue. So we expect moving forward also anywhere between 9 to 11% we want to build our sales per head.
Right. And just one long-term, continuing to this question, long-term question. Non-ticketing revenues generally have better margins than what the ticketing revenues.
No, it's almost the same, 50% margin.
Okay, it is almost the same. Okay, because I just wanted to understand whether mix, if you once the mix improves, whether that will also add on to your margins going ahead. Just wanted to understand that part.
It depends on our product assortment, our menu mix. So there are a lot of permutation combinations, but usually it's similar. We keep learning and trying to improvise to see how we can optimize it. But so far it's similar.
Okay, thank you. Thank you.
Thank you. We have our next question from the line of Angad Kadare from Samiksha Capital. Please go ahead.
Thanks again for the opportunity. So my follow-up question is on you mentioned that a new park may be announced in the near future. Will we need more capital for the same?
No, we will not need any more capital. It will be all the future thing will be done through a combination of internal accruals and maybe some debt.
And how much debt are we comfortable? Debt to equity?
About some 30% of the total spend. That's what we are thinking of from the debt.
Got it. Thank you.
Thank you. The next question is from the line of Richa from Equity Masters. Please go ahead.
So thank you for the opportunity. My question is that, this Chennai park has been shifted by a few months. So has there also been some escalation in the capex that was estimated for the park? And if so, what is the expected capex?
No, we don't expect any escalation in the cost because we already placed the order. There's only a slight delay because of some weather and other conditions. So we are not expecting any increase in the cost.
Only inclement weather that has caused the delay. All our costs are all fixed only. There is not much. Maybe some small change here and there can happen, but nothing major.
So this cost is around 5 billion. Am I correct?
Yeah, 515 crores.
Okay, 515 crores. Okay. And sir, for the Chennai park, what kind of timeline do you foresee for the park to break even? Like I think for Orissa you mentioned FY26, but
I think within the first full year of operations, I think we should be able to break even.
Okay. Okay. And is there any timeline for MP park?
Soft launch period, and then after that, I think we should be able to break even.
Okay. And is there any timeline for the MP park? Like when can we expect it to come up?
We don't know the timeline. We will keep you updated once we have some.
Okay, thank you, and all the best.
Thank you.
Thank you. Ladies and gentlemen, that will be the last question for today, and I now hand the conference over to the management for closing comments. Over to you, sir.
Thank you all for joining Wonderla Holidays Q3 FY25 result update. We continue to be bullish on the sector, and we hope to take the Wonderla brand to more cities and give better experience to all our guests. Hope to see you in the next call. Thank you again.
Thank you. On behalf of Ambit Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.